Hey guys, welcome to another episode with the Financial Controller. Today we're talking about Wirecard, the German credit card processing company, and the fraud that took place over the last decade and unfolded just recently in June of 2020. And the unique perspective that I bring to this case here is that if you're following this channel, you'll know that I started out my career as an auditor with PwC within the financial services, and then I left PwC to become a controller within the private sector. And so I have the unique perspective from both an auditor and a controller in charge of financial reporting to be able to opine on this case here. And what's really fascinating for me is that it looks like we're working within a 10-year cycle. So every 10 years we'll get one of these cases like Wirecard that will cause a shock to the system and will cause us to re-examine the relationship and the different roles and responsibility between government, independent auditor, and the company itself over the responsibility over financial reporting. And so in 2000 and 2001 with Enron, that was the creation of Sarbanes-Oxley. And so it seems like we create these rules, they create a whole lot of scrutiny over financial reporting, but then as we get close to a 10-year cycle, these rules relax and the observation of these rules relax, and then we have another case that will cause us to re-examine, and we go through the cycle over and over. And so the way I want to do this is first look at the business model of Wirecard, understand that first, and then jump into what happened, which we don't have the full details of yet because as of now in July of 2020, we still don't have the full extent and details of the fraud, but we have some details, so we'll go over that. And then we'll jump into the timeline of events beginning from 2008, which is the beginning of the whistleblowing in this case, as well as the involvement from Ernst Young at the time. And then we'll go over the role of the Financial Times, which had a huge role and impact in uncovering the fraud in this case, as well as the involvement of the BaFin, which is the financial regulator in Germany, which I'm not going to try to pronounce their full name because I'm just going to embarrass myself, as well as the involvement of the accounting watchdog that they hired, which is a financial FREP, or the Financial Reporting Enforcement Panel, which is a private entity that the BaFin hired to act as a watchdog in this case. And then we'll go over the timeline of events up until the insolvency in June of 2020. And then at the end of the video, I'm going to go over what I think is the outcome for Ernst Young from this case, because there have been some reports or articles out there that likened this case here to Ernst Young to the case of Enron and Arthur Andersen, which I disagree with, and I'm going to tell you why I disagree with that assessment toward the end of the video. And if all of this sounds good to you, give us an early like so that you can help this video reach as many people as possible and help us grow the channel. And without further ado, let's dive right into the case. Okay, so first let's look at the business model of Wirecard. And Wirecard is a credit card processing company, which means that they stand in the middle between the consumer, the bank, and the merchant. And what they do is they settle the transaction or the funds from the issuing bank and deposit that into the merchant account. And their slogan or their mission was to create a cashless society with a reliance less and less on cash and more reliance on smartwatches, so you pay for your transaction with a smartwatch or a smartphone, and even less reliance on the physical card itself. And at their highest valuation in 2018, their market capitalization, or the valuation in the market, reached $24 billion. And right before the insolvency in June of 2020, that had declined a bit to $12 billion. Obviously, the decline from 2018 to 2020 was due to all of the things that we'll talk about a little bit later here. But basically, the highest was $24 billion. And right before insolvency, their market cap was $12 billion. Okay, let's look into what happened, because Wirecard was expanding globally at a very fast pace. And what they did is, because they didn't have the necessary licensing to operate in certain jurisdictions that required to get licensing for a credit card processor, which took a while to get, so it was very difficult to obtain these licenses. And so instead of doing that, they partnered with third-party companies that already have the licensing in the Philippines, Singapore, and Dubai. And then what the agreement was that Wirecard would push the transactions to them for them to process, and then these companies would then kick back a commission to Wirecard on these transactions, which sounded fine, and Wirecard was recording the revenue from them, and the cash was being deposited in an escrow account, which normally would be fine if in fact the cash is being deposited into the escrow account and the company can prove that it has the right to that cash, that will be fine. But that becomes the problem later, is when the auditor tries to confirm the balances in these cash accounts, they aren't able to do so, and that in a nutshell is what happened in this case. Now let's look into the timeline of events, and we'll begin in 2008 when the head of the German Shareholder Association files a complaint with the German regulator, and he's alleging irregularities and inconsistencies in the balance sheet of Wirecard. As a result of that complaint, Ernst Young is then hired to do a special audit, which comes back clean, and ironically, then Ernst Young becomes the auditor of record of Wirecard. So Wirecard basically lets go of their smaller audit firm out of Munich that was doing their audit and hires EY to become their auditor of record. And then 2 years later, in 2010, the company had aspiration to become a global company, so they changed their official language of the company from German to English so that they're able to operate more at a global scale. And then we fast forward to 2015 when the Financial Times first published its series of articles titled The House of Wirecard. And obviously the analogy or the metaphor here is the house of cards, or a house that can easily collapse because it's made of cards. And they alleged, or they claimed, that there was a hole in the balance sheet to the tune of 250 million euros. And then in the next year, in 2016, an anonymous short seller published a report, and in that report he claimed that Wirecard was involved in money laundering for illegal online gambling companies, and it was a known fact at the time that Wirecard had customers in reality that were in the business of online gambling in the US and porn as well. But we don't know for sure if Wirecard was involved in any money laundering, but they did have customers in these business segments. And then obviously Wirecard came out and denied these allegations, and they filed a formal complaint with the BaFin, which is the German financial regulator, claiming that these hedge funds and short sellers are trying to manipulate the stock price. And in the same year, in 2016, Wirecard went ahead and hired a bigger PR firm because they realized that they needed to have a more experienced PR company to manage the public relations with all of the attacks and allegations coming from the Financial Times and from the hedge fund managers. And they also hired a private investigation firm. And the interesting thing about these guys is that the head of the team, of the private investigator team, was someone who was part of the previous Libyan regime, and he was the head of the intelligence or the secret service of the Libyan government, and acted even as an interim president after Gaddafi was removed from power in Libya. And so this becomes then the private investigation team that's working for Wirecard. And because of these private investigators, there have been reports from the Financial Times journalists that their computers have been hacked and their phones have been tapped into. They're even been watched while they walk down the streets. There is a very interesting video by Dan McCrum, who is the person from the Financial Times who uncovered this case. I'm going to leave a link down below in the description to his video. You can watch it after this. But basically in this video, he goes over the details of him fearing walking down the street because he has been thinking someone is following him. And so this is an interesting or a bizarre twist in this case as well. Now fast forward to 2018, and this is the time of the peak of the stock. If you remember at the beginning of the video, we said that in 2018 that was the max market cap, or the highest valuation the company ever reached, which was $24 billion of market valuation. And in 2018, the events that took place were that Wirecard own legal team, their own legal team in Singapore, internally within Wirecard, received a whistleblower tip that there have been irregularities within the finance team in Singapore. So they looked into the Singapore Wirecard finance team, 3 members of that team, and the claims were of round tripping. And round tripping is just a fancy expression that means that if you want to inflate sales, if you want to create sales in this period because you want to meet a target or because of investor pressure or whatever the case is, you work with another company so that you sell them an asset, even physical asset or financial asset. You sell them the asset for a few $1 million, let's say, in this year, so you can claim the sale on your books and records. And then in the next period or the next year, you can just take it back and buy it back from that third-party company for the same price. So it's a wash, but the effect of it is that you created sales in the year that you needed to meet a certain forecast, or you had it to meet a certain sales number. And so the claims were of round tripping. And then jumping into 2019, in March of 2019, one of the investigative journalists from the Financial Times visits one of Wirecard's partners in the Philippines that they claim under this scheme here to be working with to use the licensing in the Philippines. And what they find instead is that they arrive at the location of that address and they find that is the residence or the house of a retired fisherman who is very amused to find that these journalists arrive at his house, and they think that his house is the location of an international finance company. But either way, they published the story in the Financial Times, and obviously when Wirecard sees that story, they immediately sue the Financial Times. Now, continuing in 2019, and Wirecard is under a lot of pressure from all of the allegations from the Financial Times and the hedge fund managers. So they hired KPMG to conduct a special audit into its balance sheet. And the report on that special audit comes out in April of 2020. And basically the report comes out and raises more questions than it answers. It basically said that there are more obstacles or there are obstacles in the way of conducting the audit, and basically they aren't able to verify most of the balance of the cash balance on the balance sheet. Now, around that same time in April of 2020, that's when Ernst Young typically would issue its audit report or financial statements for Wirecard for the previous year of 2019, but they have been waiting and holding off to see the report or the results from KPMG. And when they saw the results that came back with that KPMG is unable to locate or verify the existence of these funds, they then, Ernst Young, sent out a communication to the audit committee of Wirecard, and they said basically that there's $2 billion that are unaccounted for. And basically when that happens, then the BaFin, which is the German regulator, gets wind of this communication that there's $2 billion that are missing. And because of the mounting of all of these allegations and then the report from Ernst Young at that time, then BaFin files a criminal complaint against Marcus Braun, who was the chief executive officer of Wirecard, and then the German police goes over to arrest Marcus Braun, and he's placed into custody. And then immediately after that, and also in June of 2020, then Wirecard comes out publicly and says that there is $2.1 billion that is missing or unaccounted for from its balance sheet. And obviously when that happens, all of the creditors that the company owes money to comes knocking, looking for their money, and basically Wirecard files for insolvency to protect itself from all of these creditors that are looking for their money. And now that we're in July of 2020 and we know that Wirecard filed for insolvency and that their stock price basically crashed, this doesn't mean that the company will disappear. It will continue to exist, and they continue to operate still under lower staff. And we have heard that they haven't paid the salaries to their German office staff in June of 2020. And so the company will continue and fight to find its way. And now it's led by a new CEO. His name is James Ferris, who comes from a bigger bank, and he was the chief compliance officer there. So hopefully he will bring a level of rigor to the compliance here, and as the company tries to find its way out of this. And as I mentioned at the beginning of the video, I want to go over the likely outcome here for Ernst Young, the auditing firm. Basically, there will be a class action lawsuit, and most likely from that lawsuit, the investors obviously are trying to recoup some of their investment, and the likelihood is that Ernst Young will have to pay a settlement to settle that lawsuit and pay something to compensate investors in this case. But the other thing that might come out of this also is that there have been some articles that talk about the possibility of reorganization within Ernst Young, because some of the senior partners in other segments of the business, because Ernst Young obviously will have tax and advisory practices as well. Some of the senior partners in those practices are now calling for the reorganization and splitting the audit function from the advisory and the tax, and operate as either subsidiaries within the same company or different companies altogether. So that's another possible outcome as well. The articles that were published that likened this case here and the outcome from this case to Ernst Young to Enron and Arthur Andersen, I think that's a bit unlikely, because in the case with Enron, at that time it wasn't just Enron. It was Enron, WorldCom, Tyco, Waste Management, Sunbeam. There was a few cases, there was like 5 or 6 cases at once that Arthur Andersen was the auditor for, or was involved somehow in. and that's what caused Arthur Andersen to collapse at the time. I think here this is more of an isolated case to the audit partner that was in charge of this case here, and hopefully it gets treated as such, and hopefully we'll learn something from this case as well. All right, that's it guys. Please go ahead and smash that subscribe button and the like button as well, and stay well, and I'll see you in the next video.